The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Wednesday morning, just after 9 a.m. Eastern Time. We got today and 2 more days of trading in the year of 2022. Pretty remarkable action right now. Remarkable, and then I can't believe we got 2 days left in the trading year. We have the S&P up by 4 points, but giving up some of the gains. You gave it up twice overnight. You were up at a price point of almost 38.70 at about 3 a.m. You trade down 20 points. We get up to that price level again at 8 a.m., and right now we're nearing basically flat territory in the S&Ps. You get the NASDAQ 100 just chopping around right near about 10,900. You see the sell-off yesterday early, right out of the gate, man. Markets accelerating to lower price. You get the Dow off 48 points, up 48 points. I'm used to negative prices right now. And you have the Russell up by 2 points. All the markets slightly giving up some of those gains overnight. Crude, check out the volatility. Just in the last few minutes, man, since 9 o'clock in the morning, we're getting some volatility in crude. Not sure what hit that market. Maybe somebody in the den got what's going on right now in that crude market. But, man, 9 o'clock, you catch a spike of almost $1. From 78.80, we're at 79.44. So far, we're going to be talking to our man Teddy Kegstad at 40 past the hour. We'll talk a little bit of Forex. We'll talk a little bit of commodities, crude, bonds, yields as well. Gold contract, because we're getting some action in currencies this morning. How about the acceleration in gold yesterday? And it gives it all up, man. We got volatility in 2 ways in almost every market around here, folks. Gold off $11 right now in the session at $18.11. We were as low as about $18.05 overnight. And we jumped to notes and bonds. You see the slide, man, from where we were last Thursday. On the 10-year, we were approaching about 114. You trade down almost 2 full points, right? Maybe call it a point and a half to 112.10. Right now, we're just above that price level, but you see the pullback, man. We're down about 6 ticks from where we were at about 8 a.m. this morning on the 10-year right now. You jump to the 30-year, we're up 8 ticks on the 30-year at 125.18. I've talked about the 10-year, man. You put that 10-year on a daily. And pretty obvious rollover near the upper boundary line of that channel line. That channel line, when we reached a high, folks, December 13th, you're only talking about 15 days ago. Okay, we've given up almost 3 full points from that price level right now from where we are at 112.16. Higher yields coming at us as we come into the year 2023. And we jump to the VIX this morning. Volatility index chopping around near 21.67. Let's jump over to the currencies. As we stated, a little bit of volatility in the currencies so far this morning. You see the volatility. We're at 104.35. You make it just below 104 for a hair for a moment, and we're sitting right just above that level at 104.05 on the dollar. You jump over to the euro US dollar right now at 106.46. Do you remember the days of 95.3? What date was that? Early October? Not quite October. September 28th. You talk about channel lines, folks. This is a stereotypical textbook case. Note to our man, Bud Rolfs, the channel master. You break out of the channel, you come back, you test that channel, and boom, you take off from a price point of 97 in the euro US dollar. You're sitting at 106. Doesn't look to be slowing down right now, but we'll see, man, as the yield on that 10-year potentially rolling over, see how that hits the currency markets in general. And we jump over to the dollar yen. We'll talk about all this at 40 past the hour with our man, Teddy Kegstad. Boy, quite the drop-off on the dollar yen December 20th when you had the Bank of Japan changing how they're going to approach their yield curve. And what's happened since then? You've seen the markets recoiled where you're basically back to where you were trading December 2nd on the dollar yen, and that was before you got the Bank of Japan indicating a change of their approach to their yield curve, which could be an indication that things may be changing in the future of time to come in terms of how they approach inflation, stimulus, yields, etc. All right, let's jump around to what we have going on in this market, where we're going to kick things off. How about Tesla? Are we going to get a positive day on Tesla? We might. It's starting off to the positive side. Man, it's going to give it up. You got to love this action, man. Look at this. Quite the acceleration overnight from 104 to 114. And what have we done? We've given up all of it. Now, I chuckled, folks. because this was the headline, and I'm pretty sure it's on the front page of Bloomberg, man. Let me find exactly where the headline is. There it is, okay? It's their top article in the market section. Tesla dip buyers return as stock snaps near record losing streak. Folks, the market opens in 19 minutes. It hasn't snapped anything, all right? I said, oh man, what is Tesla stock doing for that to be the headline? It's doing nothing. It's up by $1. And meanwhile, this stock has just traded down from $200 at the start of December, and you just popped from 109 to 110. I mean, shame on whoever's writing that article, man, at Bloomberg. And I love Bloomberg. They do some great reporting. They take a lot of the political bias I like out of things, I think, which just comes into so much nowadays. But who is writing an article that Tesla dip buyers return when you've got the stock trading in the month of December from 200 down to 109 yesterday, and today you're catching a bid by $1, and the market hasn't even opened yet for 18 minutes. We'll see if it returns. We got a couple articles up there. Yeah, now hold on. This was the article on the front page, okay, but they got another one, and this one just deals in facts. Tesla lures $2.8 billion from Korean day traders. Yeah, Korean day traders. They are bullish on Tesla, man. They've bought a net $2.8 billion worth of Tesla stock this year amid their worst slump on record. Talk about getting hammered, man. And they have added $160 million in Tesla shares this month. Talk about doubling down at the wrong time, man. They continue to buy stock even as it tumbled 44% in December. Its worst month ever. And you see the inflows, man. Net buying and selling for Korean day traders. Looks like May was a mammoth month of $1 billion. And talk about... And it's a lesson, folks, okay? Sometimes you think that things can't get any worse, and it looks like September, they were offloading, but at the beginning of October, all right, let's back things up for a second, because the beginning of October, they somehow thought that things were going to get a little bit better, and showing you on this chart, folks, that is the beginning of October, when Tesla was at 260, and it has basically been a one-way trip to 109. And they are in a perfect storm, folks, and the one thing that I would say, just big picture of Tesla, is that the brand has taken a monumental hit because of Elon's antics, and it's really tough once you get a brand hit to change that narrative, folks, because you drive a Tesla now, you drive an Elon Musk's Tesla vehicle, and that could be something that carries a lot of weight going forward that dampens the demand for those vehicles. I was chuckling with a friend yesterday, just chatting about it, right? Can't help but chat about Tesla, man, when it's doing what it's doing. He's saying, you know, Tesla, you used to look at Teslas and say, man, those things are so cool. They're on the forefront of technology. And now you look at them, and this is my perception, okay? And it's like, oh, man, Elon, he's really going overboard, man. He's not even managing the company. He's bringing all his politics into it while the stock just craters. That comes with it. And then, though, the other part of that is, and I find myself watching tons of videos online that just show up in my feed, okay, of Tesla self-driving vehicles, unfortunately causing major accidents, people dying, etc. Quite a shift from the brand appeal that they once had when Elon was out there saying self-driving vehicles, a fleet of Teslas coming down the line within 2 years, etc. You have to mentally really adjust where the brand is on that vehicle, where you go from a leading edge, cool as can be vehicle to now they're facing some big problems, man, and you're getting a complete readjustment of the future growth prospects. They're offering promotions now. There's no backlog of vehicles, so be careful, man, even at 109 for Tesla. Stay tuned, folks. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&Ps up by 3 points. All the markets slightly in the green right now. We jump over to Southwest, man. Still dealing with some serious woes. Look at this thing. You're going to open down another 60 cents or so. It's 2.5%, something like that for the stock at 33.35. And yeah, all the talk yesterday that the government's going to be looking into what's going on in terms of the Department of Transportation. Current systems are overmatched in situations of this scale, and their memos showed growing alarm on the eve of the epic winter storm. And man, I tell you, the other thing I'm watching that's getting fed to me sometimes on my Instagram feed, besides Tesla's going crazy and causing ridiculous accidents, is the Buffalo storm and just how magnificent some of those snow pictures are. Just the level of snow that they got there, absolutely remarkable. And Southwest, one of their biggest areas in Buffalo. But nonetheless, man, you have the Vice President of Ground Operations declaring a quote-unquote state of operational emergency at the airport after an unusually high number of employee absences. And that is a December 21st message to ramp workers seen by Bloomberg News. Well, you know, that's part of planning for some of these events, folks. You know that people aren't going to be able to get to work. You know that they're going to have issues going on in terms of if you're dealing with that type of an event. The so-called bomb cyclone, you got to love the marketing of the weather meteorologists, kicked off a cascade of disruptions that have battered the operations. And yeah, some of the numbers still. As of this morning, Southwest has scrapped more than 60% of today's flights and almost 60% of tomorrow's flights as well. Those poor people flying Southwest, man. I can't stand having to wait until choose my seat on a plane anyway. But nonetheless, they are a big carrier. And yeah, they got hit hard. Everybody got hit hard. But guess what? The other airlines, they've largely returned to normal operations after weathering, no pun intended, that storm. Yeah, the CEO again apologizing late yesterday in a video. We're optimistic to be back on track before next week. Folks, you can't have airlines getting wiped out for 7 to 10 days, man. Can't have it happening. It just it's crucial to the economic engine of the country, man. And yeah, Southwest down today after falling yesterday. And yeah, U.S. authorities and lawmakers, meanwhile, are scrutinizing the carrier's response to the storm, which analysts at Citigroup estimate could shave as much as 5% from the fourth quarter profit. It's not really the end of the word when you put it that way, right? Yeah, and I'm sure customers going crazy on social media. And as I mentioned yesterday in the program, so they operate basically, most airlines do a hub and spoke system, right? You're used to those airline maps where you got one hub and then all the spokes come out of there. Southwest is a little bit different, man. They just go route to route, and that potentially hurting things as you have, as they say, well, let's put it, customers complained only to find few alternatives. Pilots and flight attendants, meanwhile, face lengthy waits for work assignments and hotel accommodations as the storm and the disruptions hobbled the crew carrier's scheduling system and left the company's fleet of 737s out of position across the country. So it's one thing, you got a hub, right? They got planes all over the country. They don't have the people to bring them back where they need to be. It's a big mess, man, to put it lightly. Yeah, they break into it a little bit more. By December 23rd, 90% of the routes have been affected by weather. I mean, that's what happens when you have every plane skipping across the country completely, as opposed to hub and spokes where maybe some of the planes that aren't near some of the worst hit areas. But guess what, man? This storm, it was pretty pervasive across the whole country, man, which was a big one, to say the least. All right, let's jump over to a little crypto. Solana. Yeah, you talk about it, man. It doesn't end. Tumbles again, bringing crypto tokens 2022 plunged to 94%, folks, and check it out. Okay. Native token fell sharply on Wednesday, and you're talking about some serious declines here. General confidence in the future is taking a hit. This used to be a big flyer, man, in terms of Solana. This is a quote-unquote altcoin. It had held up while others have got slammed. Solana had been pummeled by the bankruptcy of FTX. And, they had backed that token. So that was a big hit, and it just keeps going, man. Dropped as much as 12% today, 8.8% lower as of 8:40 a.m. this morning. And other tokens saw modest declines. We jump back and check out where we were in Bitcoin. And guess what? I mean, Bitcoin's holding up so well right now, folks. It is remarkable. I don't know how. I don't know how it happens. I don't know how this is the decimation of the biggest Ponzi scheme ever taken place in crypto and taken, $10 billion or whatever it is. And when you think about the ramifications down the line, it's probably a lot more than $10 billion in terms of what has been taken from other cryptos, from the people. You think about it, right? Banks, they have a reserve requirement. You put money in a bank, they lend it out. Those people that get the money lent to them, they put it back in the bank, okay? So if the first money gets taken out, you're actually taking out down the line so many different implications for the economy. It's a similar way in terms of you take out all of those funds out of the crypto sector, okay? Well, those funds were supporting other funds. They were supporting other businesses which were supporting other funds, right? It doesn't make sense, folks, that Bitcoin goes from 21,000 to basically 16,000 and doesn't even budge. Meanwhile, it was a 2-day event. Are you kidding me? It doesn't make sense, man. Doesn't make sense that somehow is the capitulation of that huge Ponzi scheme on FTX. Now, FTX, nowhere near Binance, but take it for what it's worth, man. Ethereum, pretty similar action, right? You don't even break the lows in Ethereum. How does that make sense? At least Bitcoin broke the lows. Ethereum doesn't even break the lows back where we were in June. You trade down to about 1,000. You're trading at 1192. Yeah, well off 4,000 on this chart. But take it for what it's worth, man. I think there's more decimation in that crypto sector because the world changed when FTX went under, man. And people are going to be very skeptical to put their money on exchanges. And here's the deal. That's where the huge acceleration could take place because a lot of people aren't interested enough in crypto to do the work, to set up the hard wallets, to store it themselves, okay? People they're lazy. They're inherently lazy, okay? That's the human beings. We're all kind of inherently lazy. You got to get over that hump, man. Get busy, get active, okay? But if there's barriers to entry, and if nobody wants to use a exchange like FTX anymore, and you should not, okay, because who knows what is going on where. Even a company like Coinbase, okay, who knows what's going on there, man. Your client, your funds, you're going to be a general creditor. Look at this. Yeah, we got all-time lows going on. It's not over, man. All right? You had crypto, and this might be the indication here. You know, so this might be the indication in terms of you fall out of bed. Now, what day was that? Let's get back to where crypto was in terms of that fall off. Okay, November 8th or so, November 9th, November 8th is where it went. So Coinbase at that time, yeah, look at this. So Coinbase finished those 2 days at $47, and now it's trading at $32. Okay? So yeah, Bitcoin hasn't traded lower, but if you think the pain is over, take a look at Coinbase, folks. There's no reason why Bitcoin should be holding up at 16 to 17,000. Meanwhile, you got Coinbase trading from 48 down to 32. What are they down? 30, 35% after those 2 days? Even if you take it from the low of November 9th, you were at $45. You're at 32. That's $13. That's about 28%, 27%, something like that. The Coinbase is down. Don't buy Coinbase, folks. There's got to be better investments out there. And yeah, Duffy's saying easiest thing to do, avoid crypto. Nothing wrong with that, man. But if I was going to be in crypto, do not trust your crypto to anybody, folks. It's unregulated offshore exchanges. You're playing with fire. If you're doing it, there's no reason to when you can just figure it out and store it, hard storage yourself. Coming back for the open, folks. Stay tuned. S&Ps.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You had an S&P that was rolling just to negative prices as we came into the opening bell. You bounce a bit. You got the NASDAQ 100 down by 8 points. You see the volatility coming into the opening bell, though. 8 a.m., we were at 10,950. You trade down to 10,890 near the open, and we're going to see where we go today, man. But we'll see where we go. It's interesting in terms of 3 days left in the year, right? You got tax implications of what's going on. You harvest in some of those losses potentially. It's interesting, to put it lightly. But we got markets rolling over to negative prices, and we're coming down right to the area you were at 4 in the morning, man. And I don't know, how do you find a bid in this market, man? You want to be positioned to be buying this market at 3,900 coming into the beginning of an earnings season next year? It's a lot of risk reward there, to say the least. And yeah, you're seeing this market drop off, man. Look at this right now. It's a tough one to find a buy, folks, in terms of what you're talking about. We got a lot of risk out there. We got a Fed that has been as direct as possible, talking about they're going higher for longer. And look at the red on the board right now. The only thing that's red on this board is Bitcoin and the Nikkei. And the Nikkei is positive by 15 on a 26,000 index. You got the Dow sneaking back into positive territory. Let's see how Tesla is trading this morning. Negative prices. Good for them, man. Shame on Bloomberg with that headline. And I pulled it up again, folks, all right? Now they got top billing. What is going on, man? Tesla dip buyers return as stock snaps near record losing streak. Tesla opened in the red. They're just clickbaiting over there for some clicks, because Tesla's probably driving those clicks in dramatic fashion. But yeah, I'd be careful. You know, yeah, you got to like Tesla at 104 more than you liked it at 151 a week ago. But how are you going to like it if it trades down to $64, which is where it was just before the COVID acceleration? As we got markets jumping around you back to positive prices, let's see how Southwest is opening as they're getting some volatility this morning. Southwest down another 2.5% so far this morning. All right, what else we got moving this morning? AMC, you got the CEO asking the board to freeze his salary. I guess they like that for a moment, not really doing much. AMC's in big trouble, man. That move last Thursday, another offering going out to the public. Yeah, we'll see. Ooh, excuse me. Let's see. What else we got talking about? We got Southwest, we got Tesla, AMC. Yeah, Lyft. So Lyft is closing below $10 for the first time. Down another 0.1% today. Boy, this stock, man. Look at this. From $68 to $9.86. We pull up Uber. You know, if you're looking at either of these stocks, folks, and I do have a little bit of Uber, just for disclosure, and just a little bit. But if you're looking at these stocks, man, Lyft is North America, and Lyft does not have the food delivery service, okay? Uber is worldwide, and they have Uber Eats. The tough part about everything involved with these right now, and I'm looking at it from a perspective of luxury versus necessity, okay? And number one, Uber's the clear leader, okay? But number two, they're going to be able to have that cash flow from the food delivery business. But what Uber's going to be dealing with, okay, and the food delivery business is around, and it's going nowhere. But that is what has weathered the ability for them, whether it was during the pandemic, okay, and shame on Lyft for not getting into that industry. You know, they had it. Uber really capitalized in terms of turning Uber Eats into what it is today. Lyft could have done similar things, but they stuck to what they thought they were doing, which is well. But there's a difference between the two, and this is almost a little bit of a knock on Uber in terms of when you approach these, okay? Many people taking Ubers or Lyfts or taxis are doing that as a necessity, or it's a planned expense, right? Maybe you don't need a vehicle because you don't take enough vehicle rides. You don't need to go enough places in a car. Maybe you use, transportation. Maybe you use the T. Maybe you use buses, MTA, Massachusetts, whatever you use. That's a necessity. Okay, a lot of people aren't saying, I could drive, but I don't feel like driving, so I'm going to take an Uber or a Lyft. What a lot of people have been doing, though, is that they've been saying, I don't feel like getting in my car and driving to pick up food, so I'm going to get it delivered via Uber Eats. Folks, inflation is crushing people's demand for those types of services. I'll tell you my history, man. My history, Yeah, exactly. It may become too much of a luxury, Duffy. I agree, during the impending recession, okay? It's not a necessity. It is a luxury, and it is now a luxury that is an obscene fee percentage-wise on top of what you're paying. My history that exemplifies it the most, was Instacart. Now, Instacart was a pandemic darling, private company, valuation boosted dramatically during the pandemic. I was using it myself a lot because, number one, during the pandemic, okay, I had a fiance who was pregnant, okay, in the house. You didn't know what was happening, especially with somebody who's pregnant with little Tommy. You want to be as careful as possible in the early days, right? So we were extra careful. Everybody was kind of doing their own thing, whatever you were comfortable with in terms of your comfort level early on in the pandemic. So I really liked it, number one. Time was limited, number two. Okay, so what happens is we have a pregnancy, so you're extra careful. Then what do you have? Then you have a newborn, when then time becomes a real asset, right? So time was the thing that I was making the most use of and couldn't really find the time with a pandemic going on to get out, go buy groceries, spend an hour, maybe two, didn't have the time, okay? It wasn't worth it to me at the time. Well, guess what? You fast forward another year, man. I think I've used Instacart maybe once or twice over the last 6 months, man, because I couldn't rationalize spending that much money. And times change, okay? I have more time now. Tommy's going to be 2 in almost a month, which is crazy. But I have the time now, and just the percentage fee on that type of service, and this coordinates to an Uber Eats, man, as well. I'm going to get there. It's like 30%, folks. And you're talking about 30% sometimes on a $200 grocery bill. You're talking about $60 that you'd be paying, right? Because you got to pay the fees. You got to pay the extra price on every single product. Probably like a 10% jack up on just each individual good. Then you got to pay the fees. Then you should be tipping the people who are driving that Uber, that Instacart order, that Uber Eats order. I ordered Chipotle a while back, and I talked about it on the program. Okay, let's pull up Chipotle as we talk about it. Done pretty well this year, backing off a bit to $13.97, but they are positioned well in terms of building out that delivery network, building out the drive-thrus for their apps, etc. But I think I ordered 2 burritos, and the final, like, it was 2 burrito bowls, literally, that's all it was. And the final bill was near $40. $40. I think that's the last time I ordered it, man, in terms of Uber Eats. Now, in the long run, folks, Uber's changed the game. You know, they will become profitable to a good degree. Prices are going up, and they are the game in town in terms of rides, in terms of the food delivery as well. But the ride business, folks, that's going nowhere, man, because that is not a luxury. That is a necessity. So separate those two in your mind, because if you look at services like Instacart, Uber Eats, etc., they are going to face some serious headwinds, folks, because inflation is here. It's still at 6 to 7%. And boy, those numbers you cannot add. And the other part of this is, my friends are joking, the venture capital discount is no longer there, folks, okay? They were losing money for a while with that VC money. They're not doing that anymore, man. They're a public company. They have to make money. They're jacking up the prices, so get used to those higher prices. Stay tuned, folks. We're coming back with our man, Teddy Kegstad.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets catching a little bit of a bid. You got the S&Ps now up 15 points. You jetted lower quickly off the open, and then we catch a bid up to 38.75. We're currently trading at 38.70. We jump over the dollar index right now. You got the dollar index down 25 ticks, 103 handle, 103.92. Let's jump over to our man Teddy Kegstad. Folks, if you haven't checked out Teddy's work, he writes the Tiger Forex Report every Monday, available under the newsletter tab at TFNN. It also comes with a 60-minute webinar. If you have time during the holidays, folks, check it out. Forex driving so much of this market, man. And we'll jump into it. Teddy Kegstad, Merry Christmas, man. Happy holidays. How we doing?
We're doing great. So I got a bunch of 2023 predictions for all the viewers out there. Some are going to be really happy, especially your gold people, and some people are going to probably be seeing their breakfast for the second time today after I'm done. So
the truth hurts sometimes, man, but you know what they say, ignorance is bliss, not in the markets, man. So let's hear it. Where do you want to start off?
Okay, I'm going to be reading this, but I'm going to start off with gold right off the bat.
Gold,
all right,
perfect.
Gold will rally, okay, driven by fear of currency debasement and also counterparty market risk. That's very bullish for gold in 2023. Gold mining stocks should do even better, okay? So that's my stand on gold. Stocks, the super cycle is over. Currency weakness will slam corporate America, okay? Misallocation of money because of inflation and COVID mandates will crush businesses. Indebted companies will go bust, and the general public, when it's all done, will be like the 1930s all over. And if you mention the stock market, they're probably going to take a swing at you. Okay? So now we're going to get to interest rates and bonds. Central banks do not control the markets. They influence them. And it's going to become very clear in the next year. Triple threat risk to capital, higher rates, currency risk, and default risk are going to be the major issues with the bond market in 2023. So that's going to be it's going to cause a lot of volatility for other markets as well. All right, revaluations of bonds falling below BBB. That means funds will be selling it and dumping it like garbage. Okay, most investors are aware that bond funds or any mutual fund that has any type of bonds, once they get to BBB, they have to dump them. Okay, so that's going to be a big deal as so many corporate bonds get rated down to BBB next year. If you did not sell bonds yesterday, which was the best time actually over a year ago and any time since today, today or tomorrow it's going to be worse than today. So for 2023, bonds will not be a buy. You know, eventually they will be, but for the next year, forget about it. All right, currencies are all in trouble. Okay, if you want to own any currencies, buy gold or buy the US dollar Swiss, or the Swiss versus many other currencies. That's going to be probably the big winner in 2023. The rest will not be, okay? If it is over, okay, and it's going to be something this year, 2023, but most others are cryptos. This is what's going to happen with Bitcoin and the industry, the way I see it. If these other scenarios are true, this is the year for crypto and Bitcoin, okay? If it's ever going to become something, it has to prove itself in 2023, okay? And it's probably the one that will, but the rest, not so much, okay? Most of them are scams. It's all going to come to light. There's going to be a lot of upheaval in the crypto industry over 2023. But Bitcoin, if it's ever going to be that glorious thing that becomes what they always said it would be, this is going to be the year, okay? So we'll see how that pans out with them. Now we get to real estate, because this all ties in with currencies and bonds. If the average guy can't buy property, then he can't sell it either. Buyers need financing, okay? So real estate is something you need to own, to live in, and to build on for manufacturing, for companies. However, real estate has become a speculative vehicle over the last 2 decades especially, and it's totally leveraged by debt. That becomes a problem as the debt market sees up. It's going to definitely have an impact on real estate. Now we get to oil. All right, global demand will most likely slow down as economies slow down. So that means that oil would probably be suppressed or stay pretty stable. However, we have the counter issue, okay? The Green New Deals will make it harder for oil to be retrieved and the oil services industry to work with the product itself. So that means that we could have a very big issue with oil going higher in 2023. And overall for energies, oil, coal, natural gas, and uranium are all going higher, and the companies that service these products are also going higher, okay? So these are definitely stocks. There's always a winner somewhere, and there's always a loser somewhere. So if these predictions are right, you know those industries are where you want to jump into, and all the rest, I hate to say it, are are in a lot of trouble. I mean, look at the companies like Tesla and Spotify and a bunch of other companies that have gotten whacked over the past, like especially few months to the year, you know. So that's the tip of the iceberg, I think, going into 2023. And there you have it.
I appreciate it, man. Folks, you got to check out the Tiger Forex report. That's such a great summary, and you can see, folks, how Teddy goes much deeper than just Forex. And Forex is just driving so much of the action, which is pretty cool, Teddy, in terms of how it all ties in. There's so many comments I was thinking about as you went through that. I'm going to try and jump through them in a second. But just talking about, you know, the decimation that could happen in some of these stocks, I think a lot of people forget, you know, Teddy, how far we have come, man. Now I pull up like a monthly, and I try and just add some context of things, right? And I say to people, folks, when President Trump was elected, that was November of 2016. Is that right? Yeah, that's right. The S&P was at 2,200. And remember, Teddy, no matter what you think about politics, people were pretty happy about what the economy was doing in the year 2016, right? You just traded in the S&Ps from 600 and change to 2,200. We're still at 3,900. You know, point being of some context of how far the market has gone over that time. You just went from 600 and change to 4,800 and change. Doesn't mean the world is over if you get some type of pullback far off where we are. Right. Some stocks like Tesla, as you said, boy, that is quite a lesson among many others, right? I mean, good stocks that are making money. Zoom was making money, and somehow that stock got up to almost $500, and now it's at $65. That's not even the story of like the .com bubble burst. Right. Jumping back to the currencies real quick, though, because you pointed out the Swiss franc. So, so for those that have not heard it, Teddy, when you're talking about the dollar or the Swiss, why did you pick that currency out in particular, if you go over? Because I pulled up a chart as you said it, and it looks like it could have some room as it's sitting at about 92 right now, right? And many times when we were first starting to talk to you years ago, you had parity, and you were just at parity in November before this thing sold off. If you could go into that, if you wouldn't mind.
Absolutely. My biggest thing with the Swiss is that if you look at, most people look, especially if you look at the modern era, people look only at the last decade or two for all their numbers and trying to predict where we're going. I look at history, I go way, way back, and you got to realize that the Swiss franc has been basically in a bull market for the last almost, it's 170 years? Yeah, since 1850, since basically the Civil War, the Swiss franc has rallied versus almost every currency overall since then. Okay, so if it's down against any of those currencies right now, that's just a correction in the super cycle of things. Okay, and that's the one thing I have to say is that if I'm right about these predictions, and we are heading to where these markets do have such an upheaval, the Swiss is a flight to quality currency. So that means that will be something where that will hold up versus so many other currencies, and especially if the dollar, which is a flight to quality, falls apart. Well, where are you going to? Gold and Swiss.
Can you hang with us for one more segment, Teddy?
Sure.
Okay, we're going to come back, folks. We're going to finish the conversation up. We'll be right back in 3 minutes. Stay tuned. We got the markets with some volatility. 3 days left until 2023. Teddy and I will be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have the S&P up by 5 points right now. We're talking to our man, Teddy Kegstat. And, folks, if you have a chance, please sign up for the Tiger Forex Report. You head over to the newsletter tab. It's $97. You get it for a month. You also gain access to Forex strategies and fundamentals. It's a 60-minute webinar Teddy did for his subscribers. What is behind the Tiger Forex Report newsletter? You have some time over the holidays. Check it out. You get the newsletter for 30 days. You don't like it, you cancel it. You get a money-back guarantee. You can't go wrong, folks. Teddy, I'm going to jump to Bitcoin, all right, because you're talking about Bitcoin. I was talking about Bitcoin at the beginning of the program. Pretty remarkable how well it's actually held up. And maybe that's part of the reason is what you're talking about. What do you think of Bitcoin? Because I said, how does Bitcoin trade down, Teddy, for basically 2 days, November 8th and November 9th with the implosion of FTX. And then that's it. We never make it below about 15,000. We're trading at 16,700. It seems like with everything going on, you would have seen more acceleration to lower prices from 20,000 to about 16,500 right now. What's your general take on Bitcoin and where you think it might head if you're talking about next year could be kind of a reckoning if everything plays out like you were thinking?
Okay, well, like I said, next year I think is the true test. I mean, we know that Bitcoin and cryptocurrencies are not a hedge against inflation. However, they may be a store of value. And if that's the case, this is where we'll find out. Now, you got to realize with FTX and all this implosion, the current cryptocurrency market is in for a rough ride in 2023. But it's also exposing the realities that, I've been saying this for the past couple of years. I'm like, people are just putting letters on a computer and selling blips. There's just no real technology. So all the scams are going to be shaken up. And that's, I think, also going to support Bitcoin. Because remember, I used to say Bitcoin is kind of like the dollar index. As it rises and falls, the others ebb and flow together. Well, now we know that 99.9% of all cryptocurrencies out there are fugazis. They're not real. There's no technology behind it. It's nothing but smoke and mirrors. That is going to come to roost, and I think that the people who do have stuff in those currencies, as they're dumping it, they're going to put it into Bitcoin because Bitcoin, Ethereum, and Monero are the only ones that, one, are real technologies, not necessarily in use, but Ethereum is to some degree, and Monero definitely is. And Bitcoin is the first. So those three, I think, will hold value. The rest, forget about it. And that's where the money's going.
Teddy, I appreciate it. I appreciate the wrap up, man. I wish you a happy new year, and we'll talk to you in 2023, man.
Sounds good. Take care.
Okay. Stay tuned, folks. Basil's up next.